You've said in the past you think the U.S. is going to go into a recession next year. That's the likelihood, and that you think the Fed needs to cut a lot more. Is that right?
Yeah, that's right. I mean, I think they're done for this year. But our fundamental view is that U.S. domestic demand peters out in 2020, starting with the petering out of the fiscal stimulus. And then the job market, it looks strong right now, but the openings are still on a downward trend. And we think it's sort of a normal end cycle story that we're going to hit sometime in the second half of next year. And as that happens with a proactive Fed, we think they're going to end up cutting by 100 basis points next year.
That's quite aggressive, isn't it, Erik, to go from being on hold all the way through the first half of the year to cutting by 100. I mean, they're waiting for something material to happen, aren't they, to enable a material reassessment. What is it that's going to create that material reassessment? You think they'll just run out of space to create more jobs?
Yeah, that's right. I mean, it is an aggressive view from that point of view. But if you sort of look at the normal cycles, it's a long overdue if you want. There's been we call it the late cycle blues we're going to run into in the U.S. It's the longest expansion in history. It's been on steroids a bit because of the fiscal expansion at the height of the cycle. And it sort of just peters out. There's no more labor to find. There's a bit of a pressure, or a building pressure on unit labor cost. And there is if you look at the corporate earnings in America, they've come down. If you put just corporate earnings into a recession probability model for the U.S., you get like a 2/3 probability of a recession, mild recession, within a year. So late next year, maybe we are too aggressive when we say third quarter, fourth quarter. It could be fourth quarter 2020 and then early 2021. But the Fed has shown itself this time around to be much more proactive. And that's going to help, of course, but it's not going to prevent the recession and the slowdown. So yeah, we think they're going to change. And the real issue for the Fed, I think, is how and when they start to change the communication, because they are still sort of putting the dots as nothing's going to happen. That seems to me an unlikely scenario.